Casino operator, the Star Entertainment Group, has a new major shareholder on its books, a Macau-based businessman who now owns almost 7% of the company. Joining me now is business reporter Edward Boyd. Ed, good morning to you. Now, this investor began buying shares in September and is now the Star's second largest shareholder.
Yes, it's a Macau-based businessman, Mr. Wang Xingchun. He began buying shares in the Star back in September. Obviously saw a bit of an opportunity there with the Star Entertainment Group shares basically falling to a record low last year and falling further in the first couple of weeks of January as well. He then did another block trade on the 10th of January. He's basically spent about $38 million of his own money amassing this stake in the Star. He is now the second largest shareholder. He's got 6.52% of the total ownership of the Star Entertainment Group. When you get to the 10% level, that's when you need a probity check from Australian basically gambling regulators or casino regulators. So he hasn't got to that point yet, but his intentions are a bit unclear at this stage. He hasn't said anything publicly or on the record. There are some newspaper articles this morning suggesting that he has close links with two of the Hong Kong-based groups that are partners with the Star Entertainment Group at their Queen's Wharf casino in Brisbane. So potentially we may get some news out of the Star over the next couple of weeks about a bit of a financial update on the company. We know their profit results are coming up at the end of February. Here's the Star's share price though. Over the past year, you can see it's down more than 70%. They're currently trading the shares at just 14 cents, and it looks like they've fallen very slightly in early trade today. But just a couple of weeks ago, the Star did put out a profit note saying they only had $79 million in cash at the bank on the 31st of December 2024, and they're burning through that money pretty quickly. So the Star's looking for lenders. They're looking for basically lenders to give them more money to help the business keep going and survive. So the business is in serious trouble, and potentially there may be a deal on the cards over the next couple of months. It's something to watch closely. But this new shareholder, Mr. Wang Xingchun, he's now got 6.52% of the business, and he may potentially buy more in the coming days, Lucy.
Okay, remains to be seen. And Ed, shifting topics now, investment bank Citi believes the Aussie stock market is likely to finish the year at 8,600 points. That's an increase of about 5%.
Yeah, look, the ASX 200 last year had a really good year compared to previous years. It lifted about 7.5% thanks to really strong performance from the banking sector. Commonwealth Bank shares surged from about $80 in January last year to finish at about $150, $160. So they basically doubled in price, and that really lifted the index. This year, though, we've got a chart from Citi we can put up just showing the performance from last year. You can see the resources sector last year underperformed and industrials underperformed. The ASX 200 is that dark blue line in the middle of the screen. Go to the next page, you can see the correlation between the Australian dollar, which is the dark coloured line, and the light coloured line is mining companies. And in the past sort of 2 weeks, the dollar has actually fallen to a 5-year low, and that's caused the returns from the mining sector to be lower as well. Here's the stock market today. It's up 0.3% in early trade. So you can see there, we're at about 8,250 points as we're chatting right now. Citigroup expect the market to gain to 8,600 by the end of the year. It's not going to be as good a year as last year. Banking sector's not going to be as strong, but we should have better performance from some of the mining companies. And with the Aussie dollar low, we're seeing more purchasing of iron ore from China. I think that's up about 1% in the past couple of weeks. So that's a positive for our market and for our economy as well.
Okay, Ed Boyd, thanks so much.